Hi everybody, this is Gary Demas, Sentiment Timing, and this is our technical video report for Wednesday, April 30th, 2025. What a month this was. It was completely insane from the beginning to the end. But what I want to show you is the morning notes, and what I basically was saying, if weakness continues, the S&P should be testing Monday's lows. As long as Monday's lows hold, I would not be surprised to see the S&P testing yesterday's highs. But it didn't hold, and we took that out, but I'll go over down here what it is. So like we saw on Monday, the divergences can get worked off during the session, especially when the bulls are firmly in control. The first support level to watch for the S&P is the 54.68 and then 54.63. If it holds, another squeeze we could see another squeeze higher. If it doesn't, then watch the 54.45, 54.38 would be the next levels to watch. So let's take a look and see what happened. So we went through Monday's lows here. We saw selling pick up, and we made the low at 54.32. Right at the 200-day moving average on the 15-minute chart, or if we go to a 60-minute chart, right at the 50-day moving average, well, the combination of the 50 and the 200 right here. So this is where I pointed out that I said, I believe that there's going to be buyers waiting here. We took it out a little bit just to flush out some people, and then really for the rest of the day, it was just a grind higher, and there were some pullbacks along the way, but it really wasn't, anything that was that much. We just saw a pullback from the 55.21 down to the 55, say 90, so a 30-point drop, back up again, and then we just saw this squeeze in the last hour, and we came down and we tested these highs again. So everything is really kind of going like a typical bear squeeze, and they give them these opportunities to get out, but what happens is it looks like things are really falling apart. So what happens is they start adding to their short position because they want to average down because they've been short from probably all the way down here. So they're averaging down, and next thing you know, we're back up again. And this is just a rinse and repeat cycle that's going on. So the bulls are still in control. We still have bearish divergences, believe it or not, because you can see even with this rally off the lows, we remained in overbought levels here, and we still had the divergences. So we still have to stay on alert with it. But right now, I'm thinking that they may just continue higher up to the heading up to that 5600, 5650 level, and probably stretching all the way up to the 5780, somewhere in there. And I wouldn't be surprised to see one of the, maybe not this big of a drop, but maybe we see a gap up and then a drop, because we're looking for the target to come in sometime in right around the second week of May, the upside target. And if we're going to continue this, they're going to be there a lot sooner. So I wouldn't be surprised to see another pushback, and I wouldn't even just kind of coming back and testing the moving averages here to 200, and then working its way up on it and continuing up until we get to the to our upside targets, which are the 5650 and then up at the 5777. So again, we have bearish divergences. Don't get lazy. You want to be looking, making sure that everything is in hold, because if this did not hold here, we had the 38% retracement that was right at the 5400 level. So, and really the way that I was looking at it was this was not a bad area to buy, but if it didn't hold, then we're coming down to the 5350 and then possibly closing the gap. So I wanted to be pretty careful on this. We ended up We did all right today. We made about $2,000. It was some work, though, and I'm glad I got out of my position because I sold call premiums right around in this area here, and we got the drop as I was anticipating. But what happened was, I just took profits and then put a stop at entry, and we would have been, that would have been for a loss. So I'm glad I did it. We were able to pull off some some decent gains for today, and we'll try to do the same tomorrow. So if the bulls open up, I know the futures are up 30 right now. I don't know if they're going to hold, but that's going to bring us up to the 50, right around that 5,600 level, which whole numbers will, most likely that you'll see some sellers. You can see this gap. This is where the gap was, the 56.26. Maybe they open, they get up there, and then we get a pullback, or maybe they just shoot straight up. But I'm on the side that I think we're going to get a pullback or we close red. But again, I'm not saying this to short because I still believe we're in the bullish cycle. And it's really one of those things that you don't know if they're going to pull back. You assume it because it just would make sense because it's been a nonstop buying spree with every dip. And what's going to happen are people going to get accustomed to it, so they're going to buy. You're going to start seeing people switch to where, if we drop down, they're going to buy the dip, and we're going to get one that actually comes and takes these lows out, and it's going to trap some bulls. And now what they want to do is get both sides, the bulls and the bears, the retail traders, let's say, leaning the wrong way. So it's been so easy with each drop. You just buy it and then it comes back up. So there's one we're going to drop, will start coming up, and then what will happen, it will reverse and come down, and then we'll just go to the next support level. When that happens, I'm not sure, but let's just take a look for tomorrow. So if the futures stay strong and we open up 30 points, it's going to be at the 5,700 level. From there, it could, stretch up some more, maybe up to the 56.24 or even the 56.50. I think that's a really big move, but hey, we've seen that happen. And then from there, get a little bit of a pullback, maybe just, kind of bide some time, where that, and then we get that last burst up to either the 57.77 or the 5,800, which would be a round number. So on the support side, you can see this right here. We tested. We went right through the 23% retracement. So the next one, if we come back down, I would assume that we're going to be coming into the 38% retracement. And again, on the upside, it's kind of hard to figure out where the resistance is because we have this gap right here. So once the bulls get above the 55.80, which looks like they could, from there there's not really a whole lot of resistance until we get to the 56.26. And short term, you can see let's look at some fib numbers on that. Let me just squeeze this in here. And actually, do I have it on the 5-minute? I don't. Okay. Well, what we're looking at as far as support is really the bears are going to have to take out the first thing is going to be right here. It's going to be this 55, say the 5,500. If they do that, then we should see a magnet to the 54.50 level. And then on the upside, you got your 5,600, 56.25, and then 56.45. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.